You ever think about how many like agreements we just kind of blindly click through every single day?
Oh, yeah.
I mean, downloading a new app
Yeah.
or just clicking I agree on some
Mhm.
website terms of service.
Oh, totally.
We're constantly getting into these legally binding arrangements.
Yeah.
But when it comes to something like insurance that's designed to protect our biggest assets and honestly our well-being,
Right.
understanding the legal side of things,
Yeah.
it's not just smart, it's essential.
Oh, it's huge. Yeah, it's a big deal. And,
Yeah.
insurance touches so many parts of your life,
Absolutely.
your home, your car,
Mm-hmm.
your health, your financial security.
Yeah.
And this deep dive we're doing, this is custom built for you, the learner.
Yeah.
So we're going to really break down the legal side of insurance
Okay.
and give you the cheat sheet for understanding the rules of the game.
I love that. A cheat sheet.
Yeah.
All right. So we've been sifting through tons of information on this.
Oh, yeah.
To bring you the key insights on what makes an insurance policy legally sound.
Right.
So we'll start with like the must-have elements for any binding agreement,
Okay.
then zoom in on what makes insurance contracts unique.
Uh-huh.
Then we'll look at how these policies even come about in the first place.
Okay.
And the roles of everybody involved.
Right.
So we've got a lot to unpack here, but don't worry.
Yeah.
Our mission is to make this super clear and easy to understand.
Absolutely. And no headaches. We want to give you a solid grasp on this stuff
Yeah.
without making it too complicated.
Without all the legal jargon.
Exactly.
Yeah.
So you can feel good about your insurance needs, knowing what you're agreeing to, why it matters.
Okay, so let's get right to it.
Let's do it.
At its heart, an insurance policy is just a contract.
It is, yeah.
The material we've been looking at makes it crystal clear that it's a legally binding agreement between you, often the insured,
Yep.
and the insurance company.
The insurer. That's right.
They promise to pay out if certain things happen,
Yeah.
as spelled out in the policy.
Exactly.
So for that promise to hold up legally, there are 4 essential pieces that have to be there.
It's like building a table. Right.
Okay.
If you're missing a leg,
Yeah.
it's not going to stand.
Right.
And our sources actually give us this super handy way to remember these.
Okay. I like handy.
It's CLOC.
CLOC.
Yeah.
I like that. It's catchy.
Yeah.
Okay, so let's break down that first C, competent parties. Now, this doesn't mean like if the insurance company has a good reputation or if you know a lot about insurance, right?
Right.
Legally, what this means is that both you as the applicant
Uh-huh.
and the insurance company
Yep.
have the right and ability to enter into a contract.
Legally, yeah.
Yeah.
And so for the insurer, being competent usually means that they're licensed to do business in your state.
Right.
And for you, it just means being an adult,
Okay.
being of sound mind. You can't be under pressure when you sign.
Sorry.
And you're not impaired by drugs or alcohol.
Right. You got to be in your right mind to sign this thing.
Exactly.
And the information we've been looking at, it lays out a few scenarios where somebody isn't considered legally competent.
Right.
So we're talking minors.
Yeah.
Though there are some exceptions for, essentials.
Sure.
People who are legally determined to be mentally incompetent.
Mm-hmm.
People under the influence, anyone being forced into a contract.
Right.
And even certain categories like enemy aliens during wartime.
Wow.
Or even convicted criminals in some places.
Yeah.
It's a pretty big list.
That's quite a list, yeah.
And this is something really important that came up in our sources.
Okay.
Even if the policy covers like your life or health,
Mm-hmm.
if somebody else is buying the policy and paying the premiums,
Right.
they're the policy owner.
Yeah.
They're the ones entering into the contract.
That's right.
That's so important for understanding who has the rights to make changes to that policy.
Oh, absolutely vital. Yeah. They're the ones who can make the decisions.
Right.
Because they're the competent party providing something of value.
Okay, so that brings us to L in CLOC.
Yeah.
Legal purpose.
Legal purpose.
Which thankfully is pretty straightforward when we're talking insurance.
Yes, very much so.
For any contract to be legit,
Mm-hmm.
it can't be about something illegal.
Right.
It can't go against, what's good for the public.
Right.
So you can't have a legally enforceable contract to, run a shady business.
Exactly.
Thankfully, insurance contracts are inherently about
Mm-hmm.
a legal purpose, right?
Mm.
Providing financial protection
Yeah.
against legitimate risks.
Absolutely.
So our sources are clear. Insurance contracts,
Mm-hmm.
always considered to have lawful purpose.
Yeah, that was pretty straightforward.
Okay, good. So let's move on to O, which stands for offer and acceptance,
Okay.
or sometimes just agreement.
Yeah.
This is where both sides come to a mutual understanding on the terms, right?
Right. So in the insurance world, this starts when you, the applicant, make an offer.
Okay. How do I make an offer?
So you submit a completed application.
Okay.
You fill out all the details about yourself, what you want to insure.
Okay.
And this is important. You include that initial premium payment.
Oh, okay.
So our sources actually point out
Okay.
that if you just send in the application without that first payment,
Okay.
it's more like an invitation for them to make an offer.
Oh, interesting.
It's really when that money's attached that
Okay.
the ball's in your court.
Got it. So that first premium is key.
Exactly.
Okay, so then what happens? They have my offer. What do they do?
Right. So they receive your complete offer,
Okay.
and then they have the option to accept it,
Okay.
which they usually do by issuing the policy,
Mm-hmm.
or, they can decline it
Right.
based on their underwriting.
Makes sense. And the agreement's finalized when they actually issue the policy.
Yeah. When they issue it, and in some cases when the agent delivers it to you,
Okay.
that physical act kind of signifies
Okay.
everyone's on the same page.
But what if they don't like my offer?
Yeah.
What if, they think I'm a higher risk,
Uh-huh.
so they want to charge me more?
Right. That's where we get a counteroffer.
Okay.
So if they propose different terms than what you offered,
Okay.
like a higher premium or maybe some limitations on the coverage,
Mm-hmm.
your original offer is basically rejected
Okay.
and it becomes void.
Right.
So no contract exists unless you accept their counteroffer,
Okay.
which usually means agreeing to those new terms,
Right.
paying the adjusted premium.
Okay, so there's a little back and forth
Yeah, there could be a bit of back and forth.
until we both agree.
Exactly.
Okay, so we've got competent parties, legal purpose, offer, and acceptance.
Mm-hmm.
That leaves us with the last letter in CLOC,
Right.
the second C.
Yep.
Consideration.
Consideration.
Now, this sounds like legal jargon.
A little bit, yeah.
So what does that mean?
Well, in simple terms,
Please.
consideration is the exchange of value between the two parties.
Okay.
So for any contract to be binding,
Mm-hmm.
both sides have to give something up.
All right.
So in insurance, your consideration as the applicant
Okay.
is the premium payment
Right.
and the statements you make on your application.
So I'm giving them information about the risk and
Yeah.
money
Right.
to cover that risk.
Exactly.
What about the insurance company? What are they giving?
So their consideration
Okay.
is their promise to pay
Okay.
legitimate claims if a loss happens
Okay.
during the time the policy's active.
Got it.
So it's that financial security
Right.
and the backing of the company
Mm-hmm.
that you're essentially paying for.
Right.
And our sources highlight that to stay covered, those payments need to be ongoing.
Right. It's not just a one-time thing.
Right. So the
Yeah.
consideration clause will outline that schedule,
Okay.
amount of premium payments.
So it's a continuous thing.
It's continuous, yeah,
Yeah.
to keep the promise alive.
Okay. So it's like a seesaw.
Yeah,
I pay the premium. They
Mhm.
promise to pay if something goes wrong.
exactly.
All right. So that was the foundation,
Right.
general contract law stuff.
Yep.
Now on to the unique things about insurance contracts.
Right. So these special features
Okay.
really shape how insurance agreements operate.
All right. So first up.
First up, we got insurance contracts are aleatory.
Aleatory. That sounds like a game of chance.
You're right on the money.
Okay.
It's when there's a potential for an unequal exchange of value.
Okay.
And that exchange depends on chance.
Mm-hmm.
So with insurance, you might pay premiums for years,
Yeah.
never file a claim,
Right.
meaning you receive less than you paid in.
Right.
On the other hand, you could pay a few premiums,
Yeah.
then have a huge loss
Right.
and get a much bigger payout.
So it all depends on if a covered event happens.
It hinges on that, yeah.
Okay. So uncertain future events.
Yeah.
So for instance, with disability insurance,
Mm,
you pay those premiums hoping you'll never be disabled.
right.
But if you are, the benefits you get could be way more
Yeah.
than all the premiums you paid.
That's right.
And our sources also talked about life insurance.
Oh, yeah. Good example.
You know, somebody might pay a small amount in premiums,
Right.
and then after a sudden death, their beneficiaries get a much larger death benefit.
Exactly.
So it's all about that uncertainty.
That's what makes it aleatory, yeah.
Okay, so that's aleatory. What's next?
So another big one, insurance policies are contracts of adhesion.
Contracts of adhesion. That's a mouthful.
It is. It is.
So break that down for me.
Okay, so it means that the insurance company,
Mm-hmm.
they draft the entire contract.
Yeah.
There's no real negotiation
Okay.
between you and the insurer. You
Yeah.
get the contract, all that fine print.
Uh-huh.
And you either agree to it you adhere to it,
Okay.
or you walk away.
So no haggling.
Not really, no.
Mm.
At least not with personal lines of insurance,
Right.
like your car or homeowners.
Okay, so I can't be like, hey, let's change this clause.
Yeah, that
And
usually,
because they're the ones writing it, the law protects me.
it often steps in to protect the consumer, yeah.
Okay, how?
So any ambiguities,
Mm-hmm.
any unclear language,
Mm-hmm.
the courts will usually interpret that in your favor.
Okay.
So this is known as the rule regarding ambiguities.
Okay.
And our sources emphasize that it's on the insurer
Okay.
to make the contract clear
Right.
because they wrote it.
Makes sense. So if it's unclear,
Yeah.
benefit of the doubt goes to me.
Often, yes.
I like that.
Yeah.
And this connects to the doctrine of reasonable expectations, right?
Absolutely. It goes hand in hand.
Okay, so what's that?
So this doctrine basically says the court's going to interpret the contract in a way that lines up with what a reasonable person would expect it to cover.
Okay.
So that could even mean the insurer has to pay benefits that weren't like explicitly stated in the contract.
Right.
If a reasonable person would have thought they were covered.
Okay, so common sense comes into play.
Absolutely. It's about being fair,
Yeah.
preventing companies from using like tricky language
Mm-hmm.
to deny claims
Right.
when a reasonable person would have thought they were covered.
So when I'm looking at my policy, I should be thinking,
Yeah.
what would a normal, intelligent person think this means?
Exactly.
Okay, I like that. That's good to keep in mind.
Yeah.
So if something in my policy is unclear
Mm-hmm.
and my understanding of it makes sense,
Yeah.
that might actually hold up.
It very well could.
Okay, good.
Yeah.
What's the next unique feature?
Let's see. So insurance contracts are generally unilateral.
Okay, unilateral, so one side.
One-sided, yeah.
Yeah.
So in a unilateral
No.
contract,
Right.
only one party makes a legally enforceable promise.
Okay.
And with insurance,
Mm-hmm.
it's the insurer making the promise to pay benefits
Okay.
if a covered event happens.
Okay.
You, as the policy owner, don't actually promise anything.
Wait, I thought I had to pay premiums
You do.
to keep my coverage.
It's essential for keeping the policy active,
Okay.
but you're not legally obligated
Okay.
to keep paying them for like the entire life of the policy.
Right.
They can't sue you
Okay.
if you stop paying.
Okay, so it's their promise hanging out there.
Yeah.
And I have to hold up my end of the bargain
Mm-hmm.
by paying the premium.
That's right.
Okay.
It's their promise, contingent on your actions.
Okay, I see.
Yeah.
All right, so what else do we have?
Let's see. Personal contract.
Personal contract. Okay.
So most insurance policies,
Okay.
like your auto
Mm.
or homeowners,
Mm-hmm.
are considered personal contracts.
Okay.
So this means they insure the person or the owner of the property,
Right.
not the property itself.
Right.
So you can't just transfer your car insurance
Yeah.
to somebody else when you sell your car.
It's tied to me.
Yeah. Your driving history, your risk.
Right, right. But there's an exception.
Yes, there is.
Our notes say life insurance is different.
Life insurance is the exception.
Okay, how so?
It's not considered a personal contract in the same way
Okay.
because you can usually transfer ownership
Mm-hmm.
through what's called an assignment.
Okay.
So you just notify the insurer in writing,
Okay.
and the ownership of the policy, all the rights,
Mm-hmm.
get transferred to somebody else.
Interesting.
So that's why with life insurance, we talk about the policy owner,
Right.
not just the policyholder.
Okay, that makes sense. So my homeowners is tied to me
Mhm.
as the owner of the house,
Right.
but my life insurance,
Yeah.
I could potentially transfer that to someone else.
Exactly.
All right, so next up, we have that insurance contracts are conditional.
Okay,
Like,
conditional.
what conditions are we talking about here?
So their promise to pay
Okay.
is dependent on you,
Uh-huh.
the insured, meeting certain conditions.
Yeah.
These conditions are outlined in the policy document.
All right.
The most obvious one is paying those premiums on time.
Right. Got to pay to play.
You got it. And if you don't pay within the grace period,
Okay.
they don't have to pay you if something happens.
Right. Okay. Makes sense. Are there other conditions?
Yeah, there are some other important ones.
Okay.
For example, you usually have to notify them promptly when a loss happens
Okay.
and provide proof of loss.
So like documentation and stuff.
Exactly, yeah.
Yeah.
Evidence, details, all that
Okay.
to back up your claim.
Got it. So it's not enough that a covered event happens.
Right.
I got to follow procedures,
Yep.
notify them,
Mhm.
provide the documentation.
Exactly. It's all part of the contract.
Okay. Makes sense.
Yeah.
So next we have valued versus indemnity contracts.
All right. So these
sound really different.
Yeah, these are two different ways to figure out how much the insurer will pay.
Okay. So valued contracts first.
All right. So valued contracts,
Okay.
they pay a set amount of money
Okay.
no matter what the actual financial loss was.
Okay.
So life insurance is the classic example.
Okay.
You buy a policy for, say, $500,000.
Mm-hmm.
That's what your beneficiaries get
Okay.
when you pass away,
Got it.
regardless of the actual impact of your death.
So it's a fixed amount.
It's a fix, yeah, from the start.
Okay. What about indemnity contracts?
All right, so indemnity contracts,
Okay.
their goal is to put you back
Okay.
financially
Uh-huh.
where you were right before the loss.
Right.
So they cover the actual amount of the loss
Okay.
up to the limits of the policy,
Mhm.
minus deductibles and all that.
Okay.
So lots of health insurance policies,
Yeah.
they work this way.
Right.
They reimburse you for the medical costs.
Mhm.
Same with some disability income policies.
Mm-hmm.
They replace a portion of your lost income,
Right.
not just a fixed sum.
So valued contracts are a set amount,
Yeah,
and indemnity contracts are about making you whole again.
exactly. It's about covering the actual damage,
Okay.
making sure you don't profit from a loss.
Okay, that makes sense.
Mm-hmm.
All right, so last up in our special features,
All right.
we have insurable interests.
Insurable interest.
This sounds like a basic requirement to even buy insurance.
Oh, it's fundamental. Yeah.
Okay, break it down for me.
So insurable interest means you have a financial or economic stake
Okay.
in someone or something
Mm-hmm.
that justifies you getting insurance on it.
Okay.
You got to show that you would actually suffer a loss
Right.
if that person or thing was harmed.
Okay.
And this is mostly to prevent people from like gambling on others' misfortunes,
Right.
and it reduces moral hazard.
Moral hazard. What's that?
So that's the risk that someone might intentionally cause a loss
Okay.
if they benefit financially
Mm-hmm.
without really caring about preventing it.
Okay, so that's why I can't take out a life insurance policy on a random stranger.
Exactly.
Okay.
So for life and health insurance,
Mhm.
you have to have insurable interest in the person
Okay.
when you apply for the policy.
Right.
And this is usually assumed in certain relationships.
Like spouses, parent, child.
Exactly, yeah.
Yeah.
Because there's a clear financial and emotional benefit
Mm-hmm.
to them being alive and well.
Right.
You can also have insurable interest in business.
Oh,
Like a company might have it in a key employee.
sure, if their loss would impact the business.
Yeah, big time. Or in a debtor-creditor relationship.
Okay.
The creditor has an interest in the debtor's life
Right.
to make sure the loan gets repaid.
Okay, so that makes sense.
And this is interesting.
Yeah.
With life and health insurance, the insurable interest only has to exist at the beginning.
Okay.
It doesn't have to continue for the entire life of the policy.
So even if a couple gets divorced. Right.
And they both still have life insurance policies on each other
Uh-huh.
from when they were married.
Yeah.
Those policies are still good.
Generally. Yeah, even though they're not married anymore.
Interesting.
Yeah.
Okay, so that's life and health.
Right.
What about property and casualty insurance?
So property and casualty, like your homeowners or
Right.
auto,
Mm-hmm.
it's a little different.
Okay.
You need insurable interest in the property
Okay.
when you buy the policy.
Okay.
And at the time a loss happens.
Oh, okay.
So you can't insure your neighbor's house
Right.
just because you're friendly with them.
Yeah, I got to be the one losing money
You got it.
if something happened.
Exactly.
Okay, so we've covered the basics of contract law
Yeah.
and those special features of insurance.
Mm-hmm.
Now, let's talk about how these policies are negotiated and issued.
Okay.
But before we do,
Yeah.
our notes remind us that the insurance policy
Uh-huh.
isn't just one document. You got it. It usually includes the main policy itself,
Okay.
any riders or endorsements.
So those are changes to the original policy?
Yeah, written amendments.
Okay.
They add, modify, or exclude coverage,
Got it.
and then a copy of your application.
So that thing I filled out
Mm.
is part of the contract.
It's an integral part. Yep.
Interesting. Okay, so one of the biggest principles here,
Okay.
from application to claim,
Yeah.
is utmost good faith.
Utmost good faith. That's huge.
What does that mean in real life?
So it's a fundamental principle
Okay.
that underpins everything in insurance.
Okay.
It means both you and the insurer.
Okay.
You have to be honest,
Okay.
transparent,
Uh-huh.
disclose all the important facts,
Okay.
no hiding anything,
Right.
no misrepresenting
Mm-hmm.
or deceiving.
Right. So they're relying on me to be truthful,
Yeah,
and I'm relying on them to pay valid claims.
exactly. It's about trust and honesty.
Okay. And the information we've been looking at, it highlights 3 concepts that are part of this:
Okay.
warranty, representation,
Yeah.
and concealment.
All right, so let's break those down.
Yeah, let's do it because those sound kind of similar.
They do.
So what's a warranty?
Okay, so a warranty is a statement you make
Right.
that's guaranteed to be true
Okay.
in every way.
Right.
And it actually becomes part of the contract.
Okay.
So if it's not true, even by accident,
Uh-huh.
the insurer can void the whole agreement.
Okay.
As like the policy never existed.
Wow.
And warranties are usually assumed to be material,
Okay, so material meaning.
meaning the insurer would make a different decision
Okay.
about issuing the policy
Mm-hmm.
or the premium they charged
Oh,
if they knew the truth.
got it.
You see warranties more in like
Okay.
commercial property and casualty
Mm-hmm.
than life and health.
Okay, so it's a strong declaration of fact,
It is, yeah.
and its accuracy is critical.
Yeah, absolutely.
So how's that different from a representation?
Okay, so a representation is also a statement you make,
Okay.
but it's understood to be true
Okay.
to the best of your knowledge at the
Okay.
time.
Okay.